people, the mutual funds, the hedge fund managers, and everyone alike in the Wall Street publicly traded tape will want to get that exuberance moving just for you, MMT. So basically, if we do drop down, that bull is going to want to come in at any volatility in that earnings season and any volatility created during the options expiration next week. And boy, you talk about skyrockets in flight. There's going to be a lot of skyrockets in flight. Here, I'm populating the daily. Look at those gauges pop. Boy, when they pop in during the day, boy, you're getting net long, aren't you? But when they go the other way, you're going to get short when that time comes. And the public will be the deciding factor. And then how you're going to make that market. But why would you know the market's going to go down before it goes down? Just like you knew that it was going to go up before it was going to go up. Because we did it all together. Remember, talk is cheap. The truth goes a long ways. That's one thing we do here is we show the results. Because that way people can believe it. Do they ever always believe it? No. But that's the public model. We could care less. This half bar right here, MMTs, is 2714.67 in the actual bar. That's the lower end of this support level. Is a close above any drop downs we're going to be looking at getting long. If we have a reversal daily red bar, we're looking at moving in short, and that the actual complete trend cycle from this very bottom over here, which was a while ago, that was on 831. That's that gap. Never looked back. September started it out, and we've rolled into 2011. The bulls are biting at the bit about how great the economy is. I could care less. You could care less. Those truths will be revealed later in 2011, and we will be trading that particular bull or bear sentiment right along with the bear and bull ETFs and our risk management entries, long and short these markets on an intraday compounded 5, 10, and 20-day levels, which is a monthly trading day. What I will say today is that we're going to have to see the earnings be delivered, because you're going to have big gap up in the pre-market futures, and you're going to have big gap downs in after hours. If one of the bellwethers misses, that's how you get the drop down bids. And a lot of bulls out there that haven't performed want to get in this market right now. There's 3.6 trillion, trillion, not million, but 3.6 trillion sitting around doing nothing. What the market loves to do is trigger that money off that sideline. And as long as they can keep doing that, well, then we'll have people chase them higher. The fear indicators, the VXN and the bears can stay. You can stay elevated here, and you can stay complacent on the other end, and it can happen for a period of days and weeks, as I've always said, in this kind of cycle. So this kind of cycle where everyone else is saying, oh my gosh, that VIX has got to come down right away. Well, heck, they're on the wrong side of the market. They've been being killed. It can stay at a deleveraging level at all-time lows for a significant period of time. As long as the earnings come in and the bulls can get more exuberant, we can break these highs very easily. And it's going to take some of those great earnings. And so far, we've had 10 trading days of 2011 in January, and we're going into the real deal. And as long as I maintain a closing price above 27.42, I remain. What do I remain? I remain that I will be making a market before the public can get their transaction in, so that when they start entering the market, they're feeling my move. How nice that is as a market maker versus a public individual in the Wall Street tape. Internet's full of that stuff. Go with that. That ain't going to get you nowhere. No, it does not. Not in the long run. Short-term MMTs, be ready for the drop-down bids and or top-end breakouts, consolidation, half delta consolidation right here above the tops of that daily gap there. That's what the public looks at. Remember, the public looks at everything like this. These are all technical standard indicators that the public looks at and makes decisions. Why do you think our platform is so accurate? Because it already deciphered where their actions are made continuously over and over and over in various different bulls and bear cycles, MMTs. Oh, yes. So the bull on any drop down, we're a buyer. Any pop up and they want to keep it going, we're going to get in front run that move and take them for what they're going to give us. We're going to let the earnings season, we're going to have so much volatility. You're going to have after hours volatility in the futures, pre-market, you name it, worldwide markets overnight. It's going to be on for 2011. Okay? And that the last 90 days was a good environment for the U.S. economy because it was. And the stimuluses are working, and Mr. Bernanke's, well, he's doing his thing too. Imagine that. Mr. Geithner's doing his thing too. And the tax things came out, so they got the bearishness, and they got some of the bulls there. People are going to be chasing yield, and that would drive equity prices higher. Pullbacks would be bought because they would bounce until that sentiment cycle changes between the bull mind and the bull behavior and the bear behavior and the bull mind and the transactions that the two make within the broader Wall Street tape. And that's what you make a market off of. You make a market off all of their transactions. So that's what we're looking for. It's been a great day. It's been a great start of the new year. The bulls are fired. We've been buying the dips and selling the rips. We've been shorting the slide, the bids, and all the names. All the live entries and exits with MMTs have been into a glory moves. And what is glory to us? Not about making money. No. It's about what's going on and how to make those transactions within the public tape. You've been given a gift.